Hi guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host Hamza Chowdhury, and welcome to today's Sunday stock update where we go over a handful of tickers that we will cover during the week in our daily stock recap. Hope you guys had a wonderful weekend or recharge for the week ahead for trading. As always, guys, I appreciate your support. So if you could hit that like and subscribe button, it always does help the channel, guys, and helps me motivate me to keep making these videos, knowing that they're useful for you guys. As always, guys, I mentioned I'm an entrepreneur, I'm a structural engineer, I'm a general contractor, and so I always want to create videos not just in stock trading, but in real estate and other things to help people out there who are either looking to buy a home, looking to flip a home, looking to invest their money in the stock market. Obviously, we do a lot of stock market trading, which has been sort of the hot thing the past year or so. And so with that said, guys, if you have any questions or comments, do post them below. If you have any questions on any tickers that you're in or your bag holding, feel free to add them below. As always, guys, I do respond to all the comments on this channel. And again, I appreciate you for watching this video. So let's just start off really talking about kind of overall picture coming into this week. In general, the Spce, which covers the S&P, has been really overextended. And so we can see that pretty much since November, we've been trading this trend line. And every time we sort of gotten out of this trend line, we've bounced off what is in this brown line is called the 50-day moving average. And then you can see we sort of hit this upper trend line, we trade sideways, and then we flush down, and then we again sort of bounce off this 50. So more or less we trade around the 50-day moving average, and you can see that's been the sort of, consistently really for as long as, you can see in this chart back from last year. And what you can see now is we're not only outside that channel, but we're really bullish, okay? And so you can see there's a lot of these sort of green volume days. You can see we're overbought, and you can see the momentum is extremely, been positive, and it's starting to plateau. And so as it starts to plateau, heavyweights like Apple, Tesla, a lot of these heavyweights that have really, gained in the last few weeks have caused this momentum shift. And so you can see that it's overextended. And the reason why I share this and starting the video today is some of you guys may think about starting new long positions, and you're thinking, a lot of the stickers that we cover outside of the heavyweights have been beat up. And it's because these Apples, the Microsofts, the Facebooks, these guys have they have so much weight in the average of the S&P that's why they can move it the way they can move it. And so don't be surprised if you start to see a sell-off, and don't feel like, oh my gosh, here we go again. What happened, about a month ago, or, February, March. Don't be surprised that we need to kind of get back and flush. And so what I want you guys to do is when you do notice that sell-off to start to occur, kind of find an area of interest for yourself personally to start buying some longs. And I know, again, a lot of stocks like Spce, AI, a lot of stocks we've covered on this channel have been beat up. And so I completely understand why, you would add to a short position, but just keep in mind that even those stocks have ran from their lows, okay? And so I just want you guys to know that there's nothing wrong with taking profit. I do want you guys to pay yourself. I know a lot of times we wake up every day, we're excited, and then sometimes we end up with a red day. Sometimes we end in a bad trade. We regret ourselves. We stress out. And the moment we pay ourselves, we start to kind of sort of gratify and feel good about why we're doing this. And so don't forget to pay yourself. Don't forget to reward yourself. And really spend time, including today, to review your trades that you took this week. It is work, it is effort, but how are you going to convince yourself that you're not going to make the same mistake again if you're not reviewing what you're doing and finding kind of maybe consistencies of things that you constantly are doing? So for example, one of the things that I noticed I was doing is I was getting kind of early in on some of these trades. And so if I was looking for a short position and I was seeing a move, instead of seeing people exhaust out, I was just jumping in and trying to get sort of at the top. And the problem with trying to find the top is a lot of times you get squeezed out. And so the way that you can sort of avoid that is you can manage your risk. You can find and respect your stops. And it's hard to respect stops when you're constantly trying to convince yourself that you have to be right on every trade. And then you end up regretting it, because don't doubt how far these stocks can go, how low they can go. And I think that you've seen that on several tickers, that stocks that were trading, $900 can go as low as $500 in no time and blow out several accounts on the way down. Okay, so just be careful coming in. And so for Apple, it's no different than what we talked about Friday and last week, guys. We clearly have a top here at the 135 level. And I mentioned before that in order for us to do that, we broke out at the 127.50. And so as you can see that our 50-day and 20-day moving average are not only flattening out, but they're about to intersect. I'd like to see a bounce off of that level, which I mentioned most likely when that occurs, it'll be around the 127.50, which was a key support level for us and a key resistance level that we broke through. And so that's really what I would be looking for if I was adding to a long position. Again, if you're a day trader, guys, it doesn't matter. You obviously play the moves that the market gives you. And there's always several moves. I've played several option moves in the past on Apple, and so you could obviously play, some of these dips in Apple, and buy calls and sell them on these rips. Okay, so there's always day trading options, but if you're doing a long position, please just be aware that don't be surprised to see Apple come back down and back into the 127.50 where it'll get the 50-day support. Okay, and so that's what I'll be looking for this week. Got good consolidation, clear top. Again, still a higher low. Okay, so we had a low here, a high, a higher low, a higher high, and now we'll still have a higher low. Okay, now if we fail this channel, we come back to this area, right? That's when you start to get worried. But keep in mind the 200 days slowly approaching past these levels as well. And so again, I'm really confident. I feel pretty good. Like if I was to enter a long position, 127.50 would be my area of interest, especially if I'm option trading, long-term option trading. That's a great area to buy. Tesla, great trade as well. We called this out. We called a lot of these levels out, guys. You can see we had a top here at 710, 715, and we finally broke that this past week. And so that tells me that we're definitely back on the bullish side of Tesla, and we have the higher lows here, and same idea as I mentioned that we did get here on 721. That look around the 715, 720 area to add to a long position or enter a long position into Tesla. And keep in mind, guys, we got this coming up in about a week. We have earnings, and that's really where I expect to see hopefully some positive momentum in Tesla more than what we've seen. Okay, so we've made this great move. We could potentially retrace here, same kind of setup as Apple, where we're seeing the 20-day come up to the 50-day, and we're going to start seeing the 50-day plateau here, and then we can start seeing some positive momentum like we saw pretty much throughout most of the second half of last year, if not most of last year on Tesla, right? It was just pretty much positive. And so this is the first time we saw a dip and sort of downwards momentum for the moving average. And so, no surprise there. We may continue to see a sell-off. And once we get to 710, 715, pick up some shares and ride the momentum. And then let's try to retest some of this consolidation, which I mentioned a long time ago. Guys, this was not a pump and dump. Tesla was not a pump and dump. This is not a pump and dump. Okay, this is not a squeeze play, right? Squeeze plays are things like you see on Tilray, right, where they go up and they come right back down, right, where they literally go up vertical, right? Tilray, you're probably not going to see this price in some time, right? And of course, we all know the most popular one of them was GameStop, right? These are squeeze plays. Okay, this is like gambling plays, which I mentioned to you I don't really play too much on. Okay, and so Tesla doesn't qualify to be one of those plays because it actually consolidated and held those channels. It just was unable to break this top. Okay, so this was a fail to succeed, and then it just sold off. Okay, so it basically gave up, and this was right after earnings. And so that's what I'm looking for, some consolidation, some bounce off that 710, 715, continuing momentum to bounce off that. But like I said, heading into earnings, definitely expect us to get back on this upper channel, and I'll definitely be selling my shares on the way north of 800. Okay. Palantir, same idea. Is we had this sort of reject going into demo day or double click day, excuse me, of the 50-day at 2620, and you can clearly see this thing is starting to sort of go downhill. And so I still feel like there's still a lot of momentum in the stock. It's had a ton of negative momentum for the last essentially 2 months, really most of the year. And so I think a lot of that selling pressure is starting to wind down. And I expect that eventually, when the buyers step in here, we have a solid level at $21. And so if you're buying shares at Palantir, there hasn't been much catalyst. There's been tons of contracts still. The buyers are in these trades. And so same thing is just, consolidate, wait, add to your shares at 21, and then get back up here, okay, up on this channel. I mentioned to you, this is my sell point right here. It's this gap fill around 31.30. And, most likely it'll get up to about 32. And so when that happens, I will be out of Palantir. And then I can talk to you guys about another big picture idea. Okay, so really this is just consolidating sideways to me, even though it's technically downtrending. But this is the play I'm looking for right here. Okay, so whenever that happens, when we get a strong volume day like you guys saw Clover, it'll feel heavy. We'll get back up there, and don't doubt Palantir, guys. This was the one candle that I think proved a lot of people, if not the second candle, right? So these are the 2 days between demo day that we had where we took a stock that was as low as $25.82 and brought it up to almost $40. Okay, so it can happen. It just takes the buyers to come in and really push this thing. Okay, SPCE. A lot of these setups are playing. We have this with plug, so we're going to be adding Fcel and plug into our cover. We're going to take out Clover since I'm out of that trade as well. I mentioned to you guys around the 10.50. Congratulations to a lot of you guys who got that trade. SPCE has been a solid play. I mentioned to you guys we had, strong support here. Technically, if I had a long position, you could have cut it at the 200-day. I actually added some shares at the 200-day. We broke that when we heard about the Richard Branson news. I don't think it's a big deal. He's still the largest shareholder. So let's just stock unwind, let it be oversold, pick up some shares at a discount. So definitely this week, I'm expecting the stock at the minimum to bounce off of that 200-day around $27. And so 27 is my near-term price target for this week for SPCE. And then if we can get some bullish momentum and get some higher volume days, and specifically a catalyst, then we can start to get back up here and start retracing back into this channel. And so I'm still confident and bullish on the stock. It's just one of those things where some of the news catalyst comes out and they want to get you to sell some of your shares, but just hang tight and add some back here because this is an absolute steal. Okay, keep in mind I actually added shares the day before this news came out. And so I got a great average right here, right above the 200-day. But, again, I'm still bullish on the stock and I want to let it get back into this channel. Okay. And so Fcel, the reason why I want to talk about Fcel and Plug, they've been absolutely beaten up since the peak over here in early February at $29, or the high was $29. And you can see it's just been clearly downtrending. And so it was completely overbought here. You can see that both in the momentum and the RSI, which, anything above the orange line tells you it's way overbought. And then you can see that we had this bounce on this channel and then some consolidation. And now we're back into the 200-day support. And so one of the things I mentioned on a chat room I'm a part of is that I actually like the $10 level as a starter level. Not that it wouldn't trade harder, but as a starter size, mainly because of what happened after it hit $10. And so if you look here, the low here was $10, but look what happened after that. We had some crazy momentum in the stock. And so you can see the volume really picked up the last couple of days. And so really, now that we broke that level and you could potentially have a starter size, I would be looking for a 200-day play. Okay, and I would be risking right here on the daily, right here at around like around the $7 level. Okay, that's really where I'd be risking. And so I would be playing around 8.5, and then I would, like I said, I would probably be risking down here where we had some consolidation around $6.50 to $7. Okay, do I see Fcel getting that low? I mean, that would be insane for stock to go from 28 to 7 in just a matter of 3 months. But we've seen crazier things, folks. We've seen a lot of these stocks trade below the 200-day, similar to Plug. Right, so Plug is doing what Fcel is headed to do. Okay, so we had a couple bounces off the 200-day, and so you can see this play is forming in a lot of stocks, and that's why I wanted to talk about big picture on Sunday. Sunday is about big picture items. Is that these stocks are not only bouncing off the 200-day where people are getting stuck, but then they flush below that, and so that's why I'm saying is don't be surprised if it potentially breaks. And because we didn't get that major bounce that I would have liked to seen from that level of the $10. Now I would basically be waiting for a 200-day and then with an ad, and like I said, potentially cutting it off at like $6.58, $7. Okay, and so Fcel has been completely beaten up, and like I said, it's trading at like 25% of what its stock price was just 2 months ago, and so it's a good time, guys, again, to create these long positions. Buy here, sell here. I met a guy today, told me he bought CCIV at $15 and didn't sell at $60. His goal was $80. He was set on a price target at $80. And a lot of times when we set these price target, guys, the market does not care. The market gives you what it gives you. It doesn't know what's in your head. Only you know what's in your head. And why is it that we add to losers but we don't add to winners? And so with CCIV, you could have kept adding, and then when it flushed and it had that sort of engulfing candle on the bearish side, it's time to get out. Okay, and so Fcel has been one of those candles that, again, getting it in this consolidation range on the daily is a great buy. And so I expect it to play like Plug, which was even crazier, was up at 75. But look at this crazy momentum, guys. This is not trading. This is just squeeze plays. This is high momentum, getting people out of the trade days, right? People who are shorting, getting them out of the trade. And so what you want to look at are areas of consolidation, areas that hold, right? Areas that hold. And so will Plug eventually get back up here? I'm sure. This is not a squeeze play, but look at these candles here, though, getting back up there. But it was holding these levels, and then finally they decided to fade it. And so same ideas. We're under the 200-day, but look, we have some consolidation at these levels, 22 to 25. And so I would be same thing. I would be looking to buy Plug at these levels that it's even trading at, 20 right here. The low is 26, I believe it was. The low is 24. And so these levels here are outside this channel under the 200-day is an absolute steal. And so you could easily start building a starter position long size right here at a retest of the lows. Okay, and so this was an absolute steal, and you can see the momentum has been negative for quite a while, for a very long time in fact, and same thing with the daily RSI. Okay, and so again, I would be looking more at the 22 to 24 level if I was to get into plug, but you can see a lot of these plays are setting up to going very bearish under the 200 day. Okay, and you can see also the 50 days is completely shifted downwards as well. The trading under the 20 days, and you can see that the 20 days constantly acting as resistance. Okay, and so the near-term price target for plug would be the same idea. It'd be about $30, $31. Last but not least, guys, our favorite stock, if I should say that, AI. Solid base that we have at $60, been super solid for us. Clearly there's been a good base here, and you can see that there's been a test. We actually made a higher high here. We did break that top, and then we sort of faded. So same thing, guys, with this high volume day, the buyers are definitely in this trade. And same idea is I'm looking at 82.65, around 82 to start releasing my shares. May, depending on the volume, depending on how heavy the tape feels, which is how strong, you know, the volume comes in that day, may hold it for a potential retest here of the resistance around $90. But like I said, definitely going to be releasing a good chunk of $82. But same idea, guys, solid buy here, right? When you're buying stuff that's, you know, way below the 50, which is around still around 98 bucks, 100 bucks, you're getting an absolute steal. And so we're forming a good base here. And like I mentioned to you guys before, you know, it's very similar to how DoorDash traded up until this day here, where we had this bullish candle and it was able to continue that momentum and keep that sort of strategy. So this was down at 125, came all the way back up to like 155. Okay, and now it's using the 50-day as resistance. And so the same idea here is you could potentially play AI once you do see that engulfing candle up to the 50-day, wherever it is at that point. Okay, so we will cover it this week. I'm still in the trade, and so we'll be talking about it. So with that said, guys, please let me know if you have any questions, comments. I hope you guys have a wonderful week. I will see you guys tomorrow. Happy Sunday, folks. Take care. Bye-bye.